Ladies and gentlemen, welcome back to Data Dispatch. I hope you guys had a wonderful weekend, but it's time to get back to the market. We're going to be talking about what to expect, especially with one of the biggest AI stocks that are out there right now, set to report earnings on Wednesday, August 28th after the bell. That's Nvidia, ladies and gentlemen, and we're going to be talking about what does Wall Street expect and investors like you and I, specifically looking at how this AI stock could lead to a large domino effect, not just in the market, but also AI stocks that we've talked about across the board, such as PLTR. One thing that we do need to consider, remember last Friday, the Fed came out and said that interest rate cuts are ahead of us. However, we don't know exactly when or by how drastic they will occur once this cycle of rate cutting does start to begin. We do have PCE data that will be released this Friday that will give us even more of a further gauge on how inflation has really been affected within this economy within the last year. If you're a new or returning viewer, hit that like button. Let's get into the video. Now, Nvidia, talking about that, at $129. That's what we saw at market close. After we had the Fed that released the information and the speech regarding the fact that we're going to have interest rates ahead of us, we saw a large amount of confidence and rebound occurring within the market. You see Nvidia here at 129. We see things like Palantir still doing well, 3178, and even IWM, these small caps, are having a big influence into them right now, $220. We see a lot of momentum coming into this ETF particularly. Now, what to expect in the markets this week? We're going to be breaking it down. Of course, talking about Nvidia, looking also at some of the other big companies that will be reporting their earnings. We're seeing from Salesforce, Dell, and CrowdStrike, this is really going to be a big, busy week from tech firms specifically. Now, also, what I mentioned before, this Friday, releases the Personal Consumption Expenditures Index, the PCE, and this is going to show whether inflation continued to drop in July, basically signaling another type of variable for the Federal Reserve's next move, which is to further increase the probability that we're going to see those interest rate cuts come September. That's the hope, not the guarantee. We're also going to see GDP published on Thursdays, looking to see the housing market and what's happening there, especially with mortgage rates that are actually starting to decrease. But specifically, going to the big thing that I think we need to highlight on is what to know ahead of Nvidia's earnings. Now, with this being said, analysts are expecting revenue and earnings to be more than double from a year ago period. So investors are really putting Nvidia at a high standard. And we see this right now with earnings per share at 64 cents and revenue estimates at about 28 billion, with earnings per share revisions in the last 90 days, 19 in the bullish direction and 12 in the bearish direction. Going back here with investors and specifically what they're looking for, one of the big things that they're going to be keeping at the top of their list is looking for sustained data center growth. And also a big thing, and I think this is going to be a pretty big thing, any updates on these reported delays that we've seen affecting the new Blackwell artificial AI chip. We know Nvidia came with that rollout saying that they were going to be bringing new AI chips on a yearly basis. And then we see these reports of a delay of the Blackwell chip. And we saw actually a little bit of some fear, uncertainty, and doubt coming into these individual stock particularly. This will be interesting to see what happens on how Nvidia responds to this whole situation. Now, like I talked about, looking at the revenue projections, what we're seeing here, doubling Nvidia's data center growth. That's going to be a big thing. Nvidia's data center has really grown rapidly with this rise in demand and the computing tech that we've seen to support AI. One of the big things that we are concerned about, however, that we do need to look at is the firm supply constraint. We see constraints in the supply and how fast Nvidia can actually crank out these AI chips to stay with the demand. And talking about that, that does leave a little bit of a pressure in terms of revenue capping by the production availability of its key manufacturers and partners. So with that, it'll be interesting to see if they're going to talk about that with the supply. That's one thing that we also need to be looking at. Talking about this with the Blackwell delay, of course, we will be specifically also taking in to what's been happening in the broader market. Now, going back here, we know stock futures were a little changed. Right now, they're not changing too much. This is coming off a strong week, of course, after we saw the Fed come in here highlighting those interest rates. Now, Wall Street has been very anxious awaiting this cut. I agree with that right here with CNBC with this article. But really, in light of the economic activity, what we are increasing here is an uncertainty in terms of the volatility that could be coming within the market. And even though we've seen a rebound, this is great for the S&P 500, for the NASDAQ, Dow Jones. However, sitting at these all-time highs. And what's going to be happening with the rate cuts, and is a soft landing actually going to occur? That is a big piece of uncertainty and riskiness that is entering into the market. Now, making it harder to expect a retest of this month's lows, Powell did not indicate how or how much, like I said, interest rates are going to be potentially be lower. A thing that I think is going to help gauge more of, I want to say, confidence that we're going to see interest rate cuts come September will be what will the PCE data show this Friday. And also, we're going to have Nvidia that will have a big influence on the market depending on how their report goes, just due to the fact that they do have a big presence within the S&P and also do take into a major effect with price changes that do have a large change within the market. Talking about Palantir here and what we specifically want to finish with, still sitting up here in the mid-30s and lower 30s, excuse me. I think 31.78 here is not a bad point for Palantir. We've seen this consolidation, and holding above the 30s is incredibly important, especially since that was a resistance point just a few weeks ago. Now, where we see Palantir is kind of at these highs, and these 52-week highs that we've not seen for a long time. In getting into that, there's an interesting article here talking about, has Palantir ran out of room in its recent bull run? Now, we're bullish on the channel. Data Dispatch is bullish on Palantir, but in terms of the short-term price movements right here, the stock is appreciated by 50% here in the recent future. We've seen it do it incredibly well since its 2022 low, and the fundamentals are continuing to grow strong. Operating leverage is strong. Valuation, though, however, is one of the biggest pieces of criticisms that investors and even retail investors use towards Palantir. However, they continue to expand with their company. We see that with AIP. We've seen price targets from Webush right here continuing to maintain an outperform rating with a $38 price target, even Northland Capital coming in here at $35. Now, consolidated revenue grew by 27% year over year in the last quarter earnings, which is notably better compared to its quarter one. We see profitability that's increasingly doing very well, and the balance sheet is one of the best balance sheets that I've seen in a particular individual stock. Commercial, governmental growth continuing here, but valuation is where we need to really take a look at, especially in the short term, because Palantir is now a $73 billion company in terms of market capitalization. It was at $50 billion just basically a few months ago, and its current price to earnings ratio is extremely high. So if the company maintains above a 20% annual earnings per share expansion, it will remain above 50 going into 2027. This indicates that the market is keeping Palantir at a high price in terms of what investors are willing to pay for the stock. It is trading at a very high premium, which inherently, for those value-oriented investors, there is a lot of inherent risk that is associated with that. However, a big counterpoint here is that PLTR's valuation ratios were always historically sky high, and it was never an obstacle for the stock price to continue soaring. So does it still have room to run? However, looking at this discounted metric here that this author wrote in the Seeking Alpha article talking about the mitigating factors, conclusion right here is saying that there's really no room in terms of this last bull run that we've seen for this further rally. However, these are just models. However, I do see the concern here that Palantir has really expanded, and with rate cuts coming here in the near future, possibly we could see the testing of that $30 level of support. So for people that are trying to get into Palantir right now, maybe waiting for a dip, of course, don't take my word for it. I don't know what I'm talking about, but a dip could not necessarily be the worst thing with the run-up that we have had. Now, there could be that whole phenomenon of FOMO that does set in that could push Palantir up into the 40 bucks. That is incredibly possible. I want to know, what do you think about all this, especially with NVIDIA earnings, Palantir, things coming up in the market, PCE? When do you think the first interest rate cut's going to be happening? What do you think we'll be expecting with NVIDIA's earnings? Do you think it's going to have a big effect on the market? And what are your thoughts on Palantir? Peace out, take care, and I'll catch you guys later.